Okay, so very good afternoon, everyone. This is Prashanjit. I will be taking you through today's session. Today we are going to learn about an advanced concept which is known as institutional trap curve. Right? This is very important topic, and this is going to help us in understanding price action a lot. Okay. So before we move forward, I would request each one of you to go through the disclaimer first. Okay, so let us begin today's very important session, which is about institutional trap curve. So institutional trap curve basically helps us to understand each and every price movement in the chart. Okay, it gives us a fantastic insight how price will behave in the future. It tells us where price will be in uptrend or downtrend, or it will be in sideways trend, right? It also tells us where the trend will change or where it will continue. The trend will continue. In fact, false trends can easily be identified by using institutional trap curve. It helps us to understand where and which conventional pattern and trap zones can be expected to form, and hence it gets easier to trade them. I mean, you will know where a certain kind of a trap zone can form or a certain kind of a conventional pattern can form. Okay, and that will help you to decide the trade bias for yourself and take the trade. Okay, it gives a complete picture of the behavioral aspect of price. Okay, okay, so okay, so let us take this as our board, drawing board, and this rectangle, and let us try to understand what is institutional trap curve. Okay, so now you can see there is a red line in the bottom of the rectangle, left side bottom of the rectangle, right? Here you can see a red line. This denotes price is falling in the chart. Okay, so we are drawing a chart over here. Okay, so now price is falling. Thereafter, what happens? Price moves up. Understand, this is where the IPO happened. Okay, and this particular stock, it came in existence in the exchanges. Okay, so this is the first day of trading, whatever happened, and price came down, then stopped and turned. So this is the start of the chart. Okay, starting point of the chart. So what happens there? You need to know that, right? So what happening there? Price stops and turns and creates a support. Okay, So this is the low of the chart which got created just right now. Then price returns to the support, creating a resistance also. If you go to any chart, you will find this to be true. Okay. So this is the high and the low of the chart after the IPO, and the chart started. Okay. And price starts moving in a sideways manner. Okay. After moving in a sideways manner, what happens? Price suddenly drops down and breaks the support. Okay, breaks the support. But it fails and moves up, and thereafter it breaks the resistance. So when that happens, this small fake out in the price, that is, price tried to go down further but it failed, and something pushed the price up, and because of that pressure the resistance got engulfed. So when that happens, we call this fake out as a spring. Okay, so this can be called as a fake out or a spring. So after a spring, when price breaks the resistance and closes above, now this is very important, price needs to close above, okay, the resistance. So once price closes above, we call it as engulf. Okay. So once price engulfs the resistance, what happens? This sideways movement, thereafter is known as an accumulation. Okay. So an accumulation forms in the chart. What is an accumulation? You might have heard about this term many times, right? So this is an accumulation. Accumulation means where investors or traders, they are buying, right? They are accumulating these shares. Okay. So at the beginning, at the bottom of the chart, you will always see first people buy the shares, and then once price moves up, they hold it, and once they get a profit, they books it. So at this stage, you will see a lot of sideways movement in the chart. So when there is a sideways movement and there is a spring happening, and after this spring, if you see a breakout happening of the resistance line and price engulfs the resistance line by closing above, then you know accumulation has formed in the chart. Okay. So once an accumulation formed, what happens next in the chart? That this is something you need to understand. So the trading, as far as a price action trader is concerned, his first trading starts from, his first signal comes from the break of the resistance and price closing above the resistance. Okay. Now thereafter, as per institutional trap curve theory, after price breaks out the resistance and closes above and the accumulation gets created, price will give a throwback. So this is known as throwback. Price will go down again back to the accumulation and it will retest the accumulation, right? So it will retest the fresh accumulation. Once the retest happens, at this point, we as a price action trader will go for a long trade. So there we start our buying. Okay. Now after this happens, after this buying happens, what happens next? After the throwback and the test, price moves up. Okay. And you start making profit. Okay. Now this is where the investors entered. Not only investors, but many, daily traders, weekly traders, and also scalpers, they also entered the trade. The scalper will end his trade on that particular day. Maybe he may get this much of profit. But what about the day trader, the other type of traders like weekly, monthly and positional, I mean the investors? They will not book the trade here, right? So where they will book the trade? So to understand that, you need to understand the entire institutional trap curve, and this will help an investor, a weekly trader and all kinds of traders to gauge that exactly where can be their target. Okay, this institutional trap curve will help to understand the target part as well. Okay, so now, so after the throwback, when price moves up from the accumulation, thereafter price changes its trend. Okay, price changes its trend, and after the accumulation and the breakout, a new uptrend starts. Okay, so in an uptrend, what happens? Price creates higher highs and higher lows, right? That is how we know that the uptrend is there, right? By looking for higher highs and the higher lows. What is a higher high? Double H means higher high and HL means higher low. So this is the short form of that. So higher high means a high has formed which is higher than the previous high, and a higher low means a low has formed which is higher than the previous low. Okay, so then the uptrend starts, and we can keep our trade open as because the uptrend is going to continue. So stage this stage after the accumulation is known as markup stage or uptrend stage. Okay, so in an uptrend what happens? Now let us see. So in an uptrend, price will create higher highs and higher lows, and price will slowly move up. Okay, so once price starts moving up, creating couple of price swings by doing higher highs and higher lows, thereafter what price will do? Price will suddenly stop at a place, create a resistance, and it will again start moving sideways. Okay, it will again start moving sideways in between the uptrend. Now what happens there? Inside this sideways movement, a spring may get created. Okay, after this spring, maybe price will come down and a higher low will be created, and after the higher low, price will break the resistance and price will close above. That means price will engulf the resistance. Now once this engulf of the resistance happens, then this sideways movement, we call it as a reaccumulation. Okay, so at this reaccumulation stage, price moves in sideways movement because at this stage many institutions they book some profit and they again go long. I mean fresh longs are taken at this stage. Okay, at this stage. Okay, so you will see a breakout happening at the upper side and price will close. So in a uptrend, many reaccumulations can form, many sideways movement can form. Okay, so after a accumulation there will be a throwback will retest the accumulation and price will start its uptrend. After the uptrend, inside the uptrend, price will start creating reaccumulations. Okay, price will start creating one after another reaccumulations. So these reaccumulation areas are beautiful places to be, for trading. Not only that, these uptrend swings are also very nice for going long. Okay, so now what happens? Once reaccumulation gets created, then again a throwback happens. Okay, in the price. The throwback takes the price back to the reaccumulation, and this is the point a price action trader can trade it. This is known as a retest to the reaccumulation, and thereafter, as because we all are buying and this is a reaccumulation, we know price is going to go up, a big long trade happens. The investor who entered the trade at accumulation, he is still holding. The weekly trader and the day trader may get out at this position when the sideways movement start happening. Okay, but the investor, he is still there in this trade because till now there is no sign of a trend reversal. Okay, trend reversal doesn't happen just anywhere, right? There are certain signals prior to that, and then only the trend reversal happens. Okay, so these are some of the signals I will teach you today. Okay, so after reaccumulation, always expect a reaccumulation happening. So after accumulation, price will not go down directly. A downtrend will not start. It has to be an uptrend. Okay, and thereafter you will see, you do a lot of practice, you go to any chart, you will find price will, after accumulation, price will always create reaccumulations. So if you are trading the bottom, you can hold your trade till the top. Now how to know where the top will happen? So now, as you can see, if I am a day trader also, I can keep on trading this highs and lows, okay, this lows basically, and I can go long, and after the break of the reaccumulation, the monthly trader can again enter. If he has not able to enter here, he will enter here again, right? I mean, if he miss the trade, then he will enter here. The weekly trader also enter here, the day trader also enter here, and as per their trading strategy, they will wait for their target, and the target will certainly happen. Okay, so now this reaccumulation happened, price gave a throwback and price moved up, and after the reaccumulation, again the trend continues by creating higher highs and higher lows. So this is our markup stage or uptrend stage. Okay, so in a markup stage and uptrend stage, there can be n number of reaccumulations forming, and the more the reaccumulations, the more the trades we are going to get. Okay, so say after the last reaccumulation, what happens? Price suddenly starts creating a descending triangle. Okay, price starts creating a descending triangle, and then a Wolfie wave starts happening. I mean, price drops down below the diagonal support and moves up again. So this is another place to go long basically. Okay, but when this descending channel happens, this is a bullish channel, no doubt, and it will work as per its behavior. Okay, but this descending channel also tells us, I mean, in institutional trap curve, we call a descending channel at the top after a reaccumulation as a correction in the chart. Okay, so this is a correction in the chart. So once there is a correction in the chart, that tells me sooner or later there will be a trend change in this chart. So this is one of the signals, though the pattern is bullish, but this signifies as an institutional trap curve that there can be a trend change. So if I am a investor, now I should think of, okay, now is the time I can book out my profit. Okay, now one thing, price is very dynamic. Price can still create another reaccumulation here, and then maybe the trend changes. So a little bit, this is a signal. After this, generally the trend changes, but there are other ways to handle the trend. Okay, so this is just a signal for that, and you are not just going to take a short trade because this signal is there. That is what I mean. Okay, so you need to wait for something else to get created, and then only you will be taking short trade, because you believe that downtrend will start. Okay, and before the downtrend will start, you will get ample opportunity to book your investment trade and go short. I mean, and open a new trade, short trade. Okay, so this is how the entire game happens. Now, at the top, what happens after the correction? Price shoots up and price comes down, and price again creates a resistance and starts moving between a resistance and a support. So this is a sideways move what price does. Okay, after the sideways move, price suddenly breaks out above. Okay, and after this breakout, price suddenly fails to move up and comes down back to the support. Okay, so when this happens, we call it as a upper thrust. Okay, it is a behavior in the chart. This represents, or this tells us that there is overwhelming sell orders. There is a lot of sell orders there, and that is the reason price failed to move up and came down. Thereafter, if in this sideways movement a lower peak gets created and then price breaks down and closes below, then this sideways movement is known as a distribution. Once the distribution forms, thereafter the investor should immediately book his profits. He should not keep his trade open further, because if he is going to do that, he will lose his entire profit. I don't mean that he will lose his capital, but he may lose the entire profit which he has accrued throughout years, right? This may happen for maybe 3 years, 4 years, 5 years time, right? So understand, he may lose his entire profit if he is not booking the trade at this point. And this is what happened with many traders. The last whatever, I mean 2008 triple call, there was a recession, then 1998, so many times, right? So in all these times, if you check, you go to any chart, you will find before price went down, price has created distribution. Okay, and another thing, many investors, they have this in mind, that if I have a fundamentally good company, I can enter it. I have no problem, you can enter it. Obviously you are going to enter, but where will be your target? They don't know where to target. This is the problem. You need to know your exits before you enter, right? You need to know your exits. And distribution, having the knowledge of distribution helps that investor. Once he sees in a chart that there is a distribution forms, he can get out of this, he can get out of his position. He can get out of his long position, right? So what happened, I know a couple of investors in my community, in my some relatives, they have, they made good amount of money by investing, right? And he was a very long term investor, but during the crashes in 2008 and something, he made something like 1 crore 50. He's a salaried guy and still made that much of money, but by investing. But what happened when the crash happened in 2008 or something, and he, whatever profit he gained, it completely went off. It washed off from his account. He was not able to judge that the price is going to go down. What happened? Still, he's back to that mark from 2008, and now he's back to the mark. He has regained his profit. But think, If he would have understood that the price is going to go down and booked his profit, that profit would have been in his pocket, and once price comes down, he could have gone long again, another investment. So in that case, his investment would have grown multi times, right? So this is one advantage what accumulation and distribution gives to us. Now Anshul has a question, why it is called distribution? Because it is called distribution because whatever I have accumulated at the accumulation level, right, now I am distributing it to everyone. I mean, I have bought 1 lakh shares. Now price has moved up, right? So I want to make profit, Anshul, right? I will make profit. I will not give it to anyone, right? I will make profit. So what I will do? I will distribute my shares amongst all the sellers. Now one thing, understand why it is there. Understand why a sideways movement happens. This is also very, very important. Why a sideways movement happen in the chart? The sideways movements happen in the chart because when a big money, I mean big pocket or institution, he is entering the trade. Okay, he is entering a trade. What happens? Did he buy 1,000 shares or he will buy maybe 10 lakh shares or maybe 50 lakh shares? I don't know what is the amount, okay, of the quantity, but I know he has a big quantity, right? Think at a position, if he puts his entire, say, 10 lakh shares, will he get fill? I mean, if he is buying, somebody has to sell to him, right? Somebody has to sell to him. Do he will get that much of liquidity that many people selling to him? He may not get that much of liquidity, right? And that is the reason all these games you see in the chart happening. Okay, all these games, I mean, they are playing because they are trapping the retailers and small institutions also, right? Why? Because they want their fill, and because of that they create the resistance. They only create the resistance. I may say they only create this resistance in the accumulation and brings the price down, because once price started going down, the retailers, they start selling. Once price goes down below the support, what happens? The breakout traders, they straight away jumps in. Okay, the breakout traders straight away jumps in. So they are selling, right? And if they are selling, who is buying from them? I mean, price is falling down so sharply. Who has the gut to buy? Somebody who knows it is going to make profit for him, right? So in this entire sideways movement, they are playing. They are going long here, they are shorting here. Small quantity shorts will take the price down, and the retailers will go in and they will again buy here. Everywhere they are buying, and they are not letting price to go up until their entire fill happens. So this is how the reaccumulation happens. Yes, they will. Okay, they will, Anshul, obviously they will. Otherwise, I mean, they will not make losses, right? So this is a game. So at the end, there will be net 10 lakh shares bought and 0 shares sold. Okay, so the price will move up. Okay, so once their fill is done. Okay, so what happens when price moves up and closes above in a reaccumulation? That proves that yes, the institutions are in and they are in for a long trade, and this is a signal for us, and we do go along with them. And not only we, but many traders also go along with them, the breakout traders. But think where we are entering after they got the fill, right? So this is why the sideways movements happen at in every stage of this chart. Okay, when this correction happens also at this time, why I said that this is the first signal that a downtrend may be happening in the current market stage. Okay, so in the upcoming market stage. So why that? Because at this stage they start booking their profit slowly at this stage. This is the first stage where they start booking. They are not buying, they are selling here. And at the distribution, obviously, now whatever they bought here, 10 lakh shares, now they distribute it amongst all the retailers. Come buy, because price is moving up, and it is, look, here what they did from the correction, a big rally happened. Because of this rally happened, and this is all-time high, and price has engulfed this high as well. So this is all-time high, so price has moved up. And what happens with that? That invites all the retailers and the novices to go and buy. And because they start buying there, what happens? The institution gets a lot of fill. Now they are very concerned because they have 10 lakh shares to offload. They have taken so much shares, they have to offload, right? They cannot go and say, okay, I'm putting this order, and they will get all the fills immediately. That's not going to happen, because there will not be that much of liquidity against their trade. So this is the reason their footsteps are, printed on the chart. This is the reason, and this is the reason why the patterns form every time, and their behavior is also the same, because they cannot help it. They have to do this. They have to sell in stacks, they have to buy in stacks, and they cannot buy all together, or they cannot sell altogether. They have to sell in small stacks, or they have to buy in small stacks. And if they are doing that, they have to have a plan, and this is their plan. So they will know where I will start booking, when I will get more liquidity, all these things. Okay, so as because understand, in this chart price is in uptrend, so everybody is looking into it and seeing, oh my god, this is an uptrend, right? So I should be buying. And what the institutions start doing, the price starts moving in a sideways mode, and what they does, moving this price sideways, then they shoots the price up, breaks the resistance, and the price moves up. By this, the breakout traders, I love them. I really like them. They just jumps in. I call them jumping traders. Once they see the breakout, they jumps in, and the institution, they gets a lot of fill, because they are buying here and the institutions are selling here, so price falls down. Again at the support, some traders, the support and resistance traders, they start buying and price moves up. Okay, and the last set of orders was set at the lower peak. So this is how the distribution forms. So how we know that this sideways movement is a distribution. There will be two things we need to look at. That is, one is upper thrust, lower peak, and the breakdown of the price and closing below. So once price closed below, I know this is a distribution form, and the trend has changed. Okay. Now, another thing I forgot to mention here is, look at this area. This is uptrend, right? Price is making higher highs and higher lows. But what happened here in this descending channel? Price creating lower highs, lower lows, lower highs, lower lows. Think what is happening here. why I wanted to prove you that institutions are, doing something there. Okay, so this is a down channel, and what happens, looking into the down channel, yes, they start selling. Two type of traders are invited here. Two type of traders. One is the trend trader. Now, what is the trend trader doing? Think about it. Trend trader, this is a what kind of a trend? Lower high, lower low. What kind of a trend? Lower high, trend, right? This is a downtrend, right? Everybody knows this is a downtrend. So the trend players are in, they are shorting. What happened with them? What happened with them? They just killed them. This is known as a false trend, my dear friends. So if you know this institutional trap curve, we will know this is a false trend and this is not a correct trend. So you should never look into a trend by just getting the information of higher lows and higher highs and higher highs and higher lows on these things. You need to look for accumulation distribution and Wyckoff curve, then only you will be able to see the actual trend. So this curve is also known as Wyckoff's curve. Okay. So are you clear anyway? Any confusion, any challenges till now? Okay. So now here there is second type of it's Wyckoff. Okay. So this institutional trap curve, as you can see, price is coming down. There is another type of trader is there who is called a conventional trader. For a conventional trader, this is a descending channel and descending channel is bullish. So they are buying here. Okay. So if they are buying and price is moving up, then institution starts selling to all these points. Okay. So this is how the trap's being set. Now, what happens after the distribution? After the distribution gets created, price gives a throwback. This is also known as throwback. Throwback means price is again taken back to the distribution and the retest of the distribution happens, and there we enter a short trade and a lower high gets created and lower low gets created. That is what we call as downtrend, and the markdown stage or downtrend starts. Okay. So once price moves in from distribution, from distribution to downwards, it starts creating lower highs and lower lows. So this is a downtrend. This is the real downtrend, not this one, friends. This is what I wanted to show you here. Understand, this is not a downtrend. It is inside the markup stage. This entire stage is known as, from accumulation to distribution, is known as markup stage or uptrend. Right? This is not a downtrend. This is a very important information for all of you. Okay. Now, after the distribution, the downtrend starts. Okay. And this is also known as markdown state. So a markdown state starts from a distribution, it ends at a fresh accumulation. Okay. So then price starts moving in a sideways manner. Again, price starts to move up, but a lot of sell orders being put here. It failed to move out and came down. So upper thrust got created. Price created a lower peak and the breakdown happened. Sometimes there is no lower peak. Okay, remember this. Sometimes there is no lower peak. So price breaks down, closes below. So what formed? Another sideways movement. We call it as redistribution. Here the second lot of, if they have not got a fill here, the entire fill they do it here. Okay. So by this way, they they books all their profit, they get an average profit and they are happy. Or they may be going short here as well. So both things can happen. So once the price closes below, then what happens? Price retraces back to the distribution, a throwback happens, a retest happens, and price continues its downtrend. Okay, price continues its downtrend by creating lower highs and lower lows. Now, price is moving down, again price starts moving up. Now this time it created a false trend. This time it is a ascending channel, right? This is a ascending channel, and we know ascending channels are bearish, right? So what happens next? Price moves up and breaks down. Okay, now why this is a marked down stage, and one should not construe this higher highs and higher lows, price making higher highs and higher lows, as trend change signal. That is the reason the trend followers, they make so much of losses, because they take this as their trend change signal. Okay, so it is not like that. It is not going to happen like that. Okay, so what happens? This is a ascending channel forms, and the same way it is bearish and price falls down. And also we, as an institutional trap curve, we call it as correction. Okay, we call it as correction. So this is our curve. This is our curve. This is how the price moves in the chart. Okay, so once price reaches the bottom, it creates another accumulation, and another institutional trap curve gets started from there. This is a continuous process. I mean, at this stage, when price return to a fresh accumulation or reaccumulation, their price will create another accumulation, breakout happens, and another another institutional trap curve happened, and this time this trap curve will have a higher, will make a higher high. The price will go up and make a high previous to this. It will make a all-time high. Okay, and if anybody has any idea of Elliott curves, right? So once you put three Elliott curve, three institutional curves together, one after another, you get a Elliott curve A, B, C. Okay, and then the Elliott curve breaks, and there will be a bigger time frame Wyckoff curve getting created. Okay, so a lot of these games happen. Okay, I will show you all this in the upcoming sessions, maybe in live session. So as of now, understand this is known as institutional trap curve or Wyckoff's curve. So this is how the price moves in Wyckoff curve. Why I call this institutional trap curve? Because many things inside this has been added by price action thing, and not the accumulation distribution you may find in Wyckoff curve, but many other things are not there in Wyckoff curve. Okay, so that is the reason I call it as institutional trap curve. Yes, Anshu. Okay, three waves. Elliott wave, three waves. Okay, so this is how the price moves. Any question, any challenges? Okay, now, yes, after this a new accumulation will happen. Yes, it will happen only if it touches the fresh accumulation or fresh reaccumulation. Sometimes it may create a accumulation at a tested accumulation also. Okay, so those things can happen. Price is very dynamic. Okay, So it doesn't mean that the reaccumulation has to happen at this level. It is not that. Okay, it can happen at this level as well. Okay, or maybe at this level. And once the reaccumulation happens, we can go long. Okay. But this is a process which always happens in the chart. And to know this is happening, you have to completely zoom out your charts. You have to completely zoom out, then only you will be able to see this behavior. If you are zooming in, you have the habit of zooming in, I mean, then you will never be able to find Wyckoff, I mean, institutional trap curve there. So if you zoom in, you may see this portion and you will try to find out the entire Wyckoff or institutional trap curve here. And by this, what will happen? You will mess up. You will think that, okay, this is not working. This is not the thing, which works. But once you completely zoom out, you will see everything is there in the chart. Okay. Now, another small information here. So, that is, in a markup stage means uptrend. We look for buying opportunities at every retracement to a demand. That is the best thing you can do. Okay? Because you will get the best trades there. Your long orders will work better and give big trades, big RR trades. That is what you are here for. Okay, you can short in a mark up stage also, but your short trades will give small benefits. Okay, or may break, you may get a lot of loss. So in a markdown stage, you should look for selling opportunities at every trap zone supply. This demand and supply means trap zone supply, trap zone demand. Okay, not simple demand and supply. Okay, I need to upgrade it, I think. Okay. So these accumulation distribution areas can be a horizontal channel. I mean, it can be completely sideways between a resistance and a support, or it can look like a triangle, like symmetrical triangle, ascending triangle, or descending triangle. Okay, this is something you will not find in anywhere in Google. This is from experience. Okay, so wages have, yes, wages also, Anshul, wages also, right? Because it's a part of accumulation. I mean, accumulation or distribution. Because after wages, price can change its trend as well. Okay, so these are the things which you can get inside accumulation distribution. So if you are not getting sideways move, then don't get confused, because I have already discussed about how to mark all these conventional patterns, right? So use that. That is the reason, Anshul, I have designed this program. I have put everything there in a manner so that it helps you, right? Because if I would have put institutional trap curve before, you would have never understood what I mean, right? So whatever is there, now once I take you through the trap zones now, you will see everything happen in your front. I mean, you will be able to find where the trap zones will happen in a Wyckoff. Yes? Okay. So the accumulation distributions can also look like a symmetrical triangle, ascending triangle, descending triangle, or wedges, right? Trend changes often happen from a leftover fresh accumulation or distribution area. Okay. So what does that mean? So when price was in markup stage, it might have created a reaccumulation or accumulation, but there was no throwback and retest happened of that particular accumulation or distribution. So it is fresh. Okay. So once price comes back to that point, say after creating distribution, then the downtrend happened, then the redistribution happened, everything happened, correction happened, and now price is coming down to that leftover fresh accumulation, we can expect a trend change from there. and also a new accumulation can form there. Same happens with the distribution as well. A fresh distribution is dangerous, and even if you are going long, you should book your targets at the fresh distribution. Same for going short. If you are going short and you have a fresh accumulation below, you should book out your trade before the fresh accumulation. Okay. So this is a chart, real-time chart. As you can see at the bottom, price has created sideways. Price is always sideways at the bottom. Then a breakout happened, another reaccumulation formed, retest happened here, small retest, price moved up, a big reaccumulation, another reaccumulation. Can you see the spring here? And then the breakout, a low, higher peak also happened here. Then the breakout, then a channel happened, price moved up, another reaccumulation, then price moved up, then the correction happened, twice correction happened, can you see? And then the distribution, there is the upper thrust, lower peak, price breaks down. After the breakdown, price retested, let me remove the pen marks. Okay, so, okay. So now you can see after the breakdown, price closed below, moved up, retested the distribution, came down, another redistribution formed, breakdown, retest, dropped. Now what is this? This is a ascending channel, and ascending channels are bearish. Price drops from here, distribution also formed in between, and as you can see, price has come down to this reaccumulation, right? So it is giving bounce, and this reaccumulation is helping price to go up, and I expect price will go up from this level to this distribution. So here you can see how Wyckoff works. If you have taken the trade here, there price retested, you could have taken this trade and hold till here and make a big profit. So from say 150, you could have made 2000. I mean, somewhere here, 1900, right? So think about how much times your money is going to grow. So if you are an investor, I mean, this is the thing you should be using, right? You should not go out because price is coming down. You should not go down. I mean, you should not worry if price is coming down like this, downtrend, right? You should worry when the distribution forms. So until the distribution forms, you can keep on holding your trade, and once the distribution forms, you should book out your trade. Otherwise, whatever profit you accrued will go off, right? So this is important, where you are going to book your profits. And for a weekly or daily trader, they can keep on trading this because they know price is going to go up, because this institutional trap curve is helping us to understand that. Okay. So this is Ajanta Pharma. This is a fresh chart, I think. Price is here. I expect it to go up. I mean, at least to this distribution here. Then we will decide what happens. If a accumulation forms and the breakout happens, then price will make new high. Okay, because everything is tested above. So we will learn about this. Friends, any question about this chart? Any question? Any challenges you have? Any question? Any challenges? I think I have taken this chart on 19th June 2018. So not a very old chart. Okay. Ravi, then Jayaprasad, Rector, Manjula, Radhavendra, have you all understood? Any confusion, any challenges? Clear? Great. Yes, once you try to do that, you will face a lot of challenges, I know. So that is going to happen. That is a part and parcel of anything. Okay, any new thing you do. So a note, when price falls, right, in a markdown stage, it can fall down very, very sharply in a vertical manner. Okay, this is something you need to understand, and it may not at that time create any redistribution or correction. It can straight away fall. Okay, that is one information that can happen. So this happens due to compression in the chart, or the chart is completely illiquid. These are the two reasons. So if there is compression, what is compression? We are going to learn in the upcoming sessions. Or the chart I'm looking into is a illiquid chart. In that case, price will fall like a rock and you will not be able to get out of that chart. So it's a very dangerous chart. We will learn how to read a liquid chart. So that also I will teach you in the upcoming sessions. And compression also I will teach you in the upcoming session. So in this case, what can happen? This is what can happen. Okay, can you see? Accumulation happened, breakout, moved up, reaccumulations happen, small, I have forgot to mark. Reaccumulation, spring, breakout, retest, moved up, there the correction is there. Okay, sorry, I cannot show you. This is the correction there, small correction, price created a accumulation short, then a big liquidity spike, we call it, liquidity spike. And after the liquidity spike, what happened? Look at this. Look at this. Price dropped from 500 to 125. So even you cannot. If you remember in the trend session, I have discussed something about acceleration of trend. If you remember, right? So now, if I draw the trend here, let me draw. So this is one trend line. This will be another. What do you think? What kind of acceleration is there? Is there any acceleration of trend? Is there any acceleration of trend? Yes, we can. And what we said, if the trend is 90 degrees, it is dangerous. Isn't it? We said that. It is dangerous. And when trend is in 90 degrees, now now listen very carefully. These are my observations. When trend is in 90 degrees and a liquidity spike happens like this, a green big move up, I mean couple of green big rallies happening, absolutely 90-degree move up happening, those are dangerous thing. I call it liquidity spike to the hell. This is a liquidity spike to the hell. By doing the acceleration analysis, you know that the trend is a very steep trend, and there this kind of a liquidity spike is happening, then there will be big chance that this trend will break. Not chance, it will 100% break, right? And this time, not only it broke, but it fall down like a rock. This is Vakrangi, my dear friends. And why that fall? Because there is compression as well. We will learn about that, and that is the reason price fall down so very hard. So very hard. And this is also an illiquid stock together. It's a illiquid stock. Can you see these dots happening in the chart? This denotes illiquidity. This dots, right? This is circuits happening every day, lower circuits. Okay? This is lower circuits every day. There is no order in between. Think about that. A lower circuit, whatever is there for this stock, is getting hit every day because there are no orders between the two circuits. I mean, say this stock has a circuit of say 5%. I mean, whatever. I mean 10 rupees, right? So our order is getting accepted at every 10 rupees. In between, there is no order in this, right? In between, there is no orders for this, for the traders. That means nobody is buying. The next buying is happening at the bottom, or nobody is selling to them, whatever the reasons, nobody is selling. So what happening? Price is dropping like this, and the investor, the retailer who has entered all this trade, he is not able to even go out of this trade. He is in big pain, right? This is because of illiquidity, and that is why I say never trade a liquid chart. Okay, so once price comes down, price becomes very liquid, and many traders, they have lost their fortune here. But if you follow price action and if you know this acceleration, tell me, will you go long here? With whatever knowledge we have from the basics, today only I have taught you one advanced part. Will you go long here? Think about it. With whatever knowledge, I have given you very small knowledge, but still now you are at a place where you are capable to understand, no, I am not going to go long. I'm not going to go long. Even if price moving those so sharp, so green, beautiful candles happening, I know there is something very dangerous cooking out. I'm not going to go in. Let price break anything, then I will think of. Yes, due to acceleration. And acceleration is very important, Jayaprakash. What happens? If you check any chart, whenever there is 90 degrees steeper acceleration, you will see it breaking. And this is not from now. Go back 100 years back if you have any charts and check. This is happening from last 100 years or so. Right? So this is my liquidity spike happening at the 90-degree stage. This is steeper trend and it has to break. And when a steeper trend breaks, it breaks like a rock. I mean, it falls like a rock. Okay? And no more analysis can be done here. No more analysis because there is no data. We need data to do analysis. Okay? So understanding institutional trap curve along with all this will help you. Okay? So along with acceleration will help you to charge many good trades, okay, or bad trades. So now you will at least not put your money when price is at steeper trend or 90-degree trend. Okay. So that brings me to the end of today's session, which is about institutional trap curve. That is all I wanted to give you today. I hope you have liked this session. Now get back to your charts and identify the institutional trap curves on at least 10 scripts and be familiar before next topic. Share your work with your mentor. All the very best. And yes, thank you. End of the session. Hope you like the session. Please send in your valuable feedback to info@prashanjitghosh.com, and I hope you have liked this session. Also, this has been very important for you, and your feedbacks will help me to judge whether I am going in the right direction or not, or you need something else. So your feedback helps me to serve you in a better manner. So thank you very much for joining. Bye bye. See you then.